Good evening, my econers. If you are watching this video, this is actually your first step in my econ to taking care of your personal finances and becoming more successful with it. I am Clarissa Pace. I am EVP Gold, and I am leader of the My Econ Vision team in Southeast Arkansas. But don't let Southeast Arkansas get you, because we have members as far as Germany. So we're excited about that. Now, I want you to get this part, because this part is so important to your financial recovery. What we learned in 2000, or was updated in 2005 from RS, is that people, or working individuals, were actually paying at least $40 a week too much on their taxes because they had this W-4 form improperly completed. So what we do in My Econ is we want to start with seeing, can we increase your cash flow by educating you on this W-4 form? Some of you will not get an increase because you have been reading the form and you completed it like you're supposed to. Some people were going by myths that all zeros should be on this form, or they simply just didn't have any understanding about it and they didn't tackle it, okay? So we don't know how your personal outcome is going to be, but we hope, if you're losing in this area, that you're actually going to benefit from taking a look at this W-4 form. And then if you have been completing it properly, it's going to give you an opportunity to know why you have been doing that and why you are actually in a great position as far as your income is concerned. Okay, so let me give you a personal testimony, okay? My husband and I, when we became a part of My Econ and we learned on this form, we were actually losing $800 a month on this form. So we were excited to change our W-4 forms, get that money back into our household. That meant that we increased our cash flow by $12,000 on an annual basis. We were excited because we were able then to give ourselves a life enhancement, like the SUV and the truck that we had. We could not only pay the truck note, but then we could actually pay the insurance on there. So this is going to mean something different to everybody depending on your personal situation. But we're going to take a look at this W-4 and we're going to show you how to properly complete this W-4. If and when you get an increase from this W-4, we're going to take you to the next step so that you will know, what am I going to do with that money that has been increased income to me and my family? So let's get started right away. Okay, now this worksheet is a personal allowance worksheet. When you are hired, you actually are required to complete this W-4 form. The purpose of this form is to share with IRS the amount that should be deducted from your paycheck, and it is to calculate that taxes that's withheld according to the Internal Revenue Codes. So let's take a look here at our W-4. This is 2016. Every year is going to be 2017, 2018, 2019, and so on. Okay? Now, what it's telling us here is, in the purpose, this is an IRS document. It says to us to complete the W-4 form so that your employer can withhold the correct federal income tax from your pay. Consider completing a new W-4 form each year and when your personal or financial situation changes. Now, let's see what the changes could possibly be. Well, you could be single and you get married. You could be married and you could become single. You could actually be single and have children. You could actually be married and gain children. You could actually be married and lose a spouse. Or you could gain a dependent somewhere. And finally, certainly may not be all the changes that could happen, but the last two changes is your children may be 17 and above, and you're going to see in a minute what I mean by that. Or our government may make some adjustments when we get a new president. Let me give you an example. President Obama became president of the United States. In the first 4 years that he was president, he changed the child tax allowance. So we were generally getting one per child, and we started to get two. The second term that he was in office, he actually made an adjustment, and that's what you're going to see on this 2016 form. Okay? Now, let's take a look at head of household. I like to share this information with people because unknowingly and some knowingly, people have actually been completing their tax returns separately. Married people will separate their taxes and they will both claim head of household and share children. Then other people unknowingly will be single and they will place head of household on their tax return. And so it is important that you actually define head of household so that you can be in compliance with IRS, because you can legally benefit from this worksheet and be happy and not have to do any adjustments that are illegal. However, my econ does know that that's your personal option, and whatever option you plan to use, we're going to teach the legal option and you make the decision. So here it says generally you can claim head of household filing status on your tax return only if you are unmarried and pay more than 50% of the cost of keeping up a home for yourself and for your dependents or qualifying individuals. And then it tells you what publication you can look at. So what this means is what it says. You're unmarried and you have someone that you are taking care of at least 50% of the year, and that's the cost of the keep up of their home or any other expenses. So this could be children, this could be parents, niece, nephew, this could be an individual that you have inherited that you're taking care of. Okay, so let's go to the next slide. Now, in preparing to complete this form, there are some things that you will need to know in order to answer the questions properly. So we're going to share those information that you need to know when you sit down with this W-4 form. And incidentally, this W-4 form can actually be pulled from the website. You can just type in 2016 W-4. Or you can go to your MyEcon back office and we have it under minimizing tax strategy. You can look under there and get a copy, or you can look toward your HR or personnel department and they should be able to give you a form. Okay, now let's see what we need. We need to know what our tax filing status is, whether it's single, head of household, married, filing jointly, separately, or qualifying widower. So if you need to ask your tax preparer, ask them, or if you just take a look at your past tax return, you should be able to find the information there. Line number 2, know the number of dependents that are carried on your taxes, and your spouse is not your dependent. So your dependents may be your children, or as I just said, it may be a niece, a nephew, or someone that you take care of. You need to know if they are actually counted on your tax return as an exemption, okay? Number 2, if you or your spouse have a second job, and how much do you make annually? Number 4, do you pay child care expenses? How much annually, and do you file that amount on your tax return? 5, is your child over 16 years old? Will they be 17 by the end of the tax season? Will this affect your child tax credit? So you want to know this answer because according to the IRS documentation, it lets us know that if a child turns 17 within the tax season, then you will not be eligible for you generally get up to $1,000 in child tax credit, where you will lose that child tax credit if they turn 17 before or by December or on December 31st. So that's going to be important that you adjust your W-4 accordingly. Then you will need to know, let's go back here, child care expenses. Are they $2,000 or more that you pay in child care expenses? And do you actually claim that tax credit? So you'll need to know that information. Now, and finally, number 6, are you an itemized tax filer? That means that you use a Schedule A on your tax return. So you're going to see why when we go to page 2. But if you don't know if you have Schedule A at this point, simply go past this. When you stay involved in MyEcon, we're going to teach you these things, and you're going to know whether or not you're going to include a Schedule A on your tax return from there on out. But for now, you'll be good. If you don't know that, you just don't know, and you may not be claiming a Schedule A. Okay? Okay, at this point, we want to actually take a look at what the personal allowance worksheet looks like. And you will notice here that you're going to keep this top part of that W-4 form for your records. Sometimes there are people that think that they have to turn that in, and they really don't have to submit that to their they do not have to submit that to their personnel or HR department. So you want to keep this part for your record. Okay? Now let's look at this line by line. On line A, it reads, enter one for yourself if no one else can claim you as a dependent. Okay? If that is so, you enter one. Now, it may be a circumstance where there are 18-year-olds or children who are working. They do not work above the threshold for their parents to carry them on their taxes. And this would even include college children. But you'll need to find that out, what the threshold is, okay? And so you're going to continue to carry them on your tax return. When these children will complete, or dependents will complete this form, they're going to put 0 on line A because they're still on someone's tax return. So if you are in my econ and you are a college student, or you are working 16, 17 years old and you're working, you join the business, then you're going to need to find this information out because line A will probably be 0 if you're not making more than the threshold that can be made to be carried on the tax return. Okay? Line B, enter 1 if you are single and have only one job, or you are married, have only one job, and your spouse does not work, or your wages for a second job, or your spouse's wages, or the total of both are $1,500 or less. Okay? That should be self-explanatory, but then there are some people that get caught up with the $1,500 a year thing because they can't believe that people actually only making $1,500 a year. But here's the difference here. There are some cases where the spouse is carrying the load, and so they may have a part-time job, they may substitute teach, they may do anything that's on a part-time basis, but nonetheless, if that's you, that's none of our business, and that's not the rep's business to be stunned by that. Just know that this is an annual number, it's not a monthly number, and it's not a weekly number. Line A, enter 1 for your spouse. But you may choose to enter 0 if you are married and have either a working spouse or more than one job. It says to enter 0 may help you avoid having too little tax withheld. Well, if you are a my econer who plans to operate their business with the intent to make a profit, and you're going to reduce your tax liability through tax available deductions to you in business, then put 1 on line C. If you are one who still says, well, I got to learn this business before I do anything, and that's okay too, then we enter C. On C, we enter 0. Okay? That's going to avoid having too little tax withheld from your tax return. And then as you learn and grow in the business and you are trained, which you will need to be trained and understand, then you can go back and change this W-4 form. Now, on line D, enter number 1, enter number of dependents other than your spouse or yourself that you will claim on your tax return. So, if you have children, and we're just going to use this for an example, or any other dependent for that matter, if you have 1, if you have 10, if you have 5, if you have 6, then that's the number that you're going to put on line D. And you're going to make sure that these are the people that you claim on your tax return, okay? Line E, enter 1 if you will file as head of household on your tax return. Well, we've already defined head of household. If that's you, then enter 1 on line E. Line 5, enter 1 if you have at least $2,000 of child or dependent care expenses for which you plan to claim a credit. So if you're paying $2,000 or more for your children in daycare, and you're going to get that form at the end of the year from your daycare centers and submit that to your tax preparer, then you can enter 1 right there. If you are not, then enter 0. Line G, child tax credit. This is concerning your children who are 16 years old and below. So if they are 16 years old or below, we're going to go here and say if your total income would be less than $70,000 or $100,000 if married, enter 2 for each eligible child. Then less 1 if you have 2 to 4 eligible children, or less 2 if you have 5 or more eligible children. Okay, so let's do an example. If I have 1 child, then that means I'm going to have 2 allowances here on line G. But if I have 2 children, that's 2, 4, and then the instruction says that less 1 if you have 2 to 4 children. So we're going to minus 1 from that 4, that's going to leave 3. If I have 5 children or more, so let's use 5. There's 2, 4, 6, 8, 10, and we're going to subtract 2 from 10, that's going to be 8. Okay? Then line H instructs us to add line A through G and enter it on line H. That's very simple to do. Now let me share something with you. If you get up to 9 allowances, there's no need for you to go to page 2. Voila. If you don't have 9 allowances and you have 2 or 3 or 4 or 5, then or 6 or 7 or 8, then we're going to follow these instructions below because you now have a home-based business. Let's look at what the instructions tell us. If you plan to itemize or claim adjustments to income and want to reduce your withholding, then you would go to page 2, which is your deduction and adjustment worksheet. If you are single and have more than 1 job, or you are married and you and your spouse both work and the combined earnings from all of the job exceed $50,000 or $20,000 if married, then you're still going to go to page 2 and you're going to complete 2 earner multiple job worksheet. This is going to help you avoid having too little taxes withheld. So, and if neither one of these apply to you, then you're going to stop here and you're going to enter your information on line 5 below. Now let me say something here. I want to put a disclaimer. For those of you who are new in the business, sometimes it takes a moment for you to get or to adjust to writing off the things that are available to you. If you know that you're that person that just desires to learn more, and you're not actually going to operate the business, and you're not going to keep up your receipts and enter them into your cash flow manager, then my suggestion is that you stop here. If you are the person who says, hey, I'm familiar with this, I just didn't know what to do, I'm going to get my act in order, I'm going to do this for the rest of the year, then guess what? Go to page 2. So we're going to share with you the advantage of page 2 after this next slide. So, the importance of completing the W-4 form correctly. Let's take a look at this. I actually got this form from irs.gov. And it's going to give us an example to see if we really understand the importance of correcting this form. So let's review what happens if you are single, earn $500 per week, and claim 0, 1, or 2 withholding allowances. Let's take a look at withholding allowances. This row here has if a single person, takes no allowances on their W-4, if they have 1 or 2. Now this line is going to show us how much is deducted from their paycheck. If they do 0, that's $61. If they have 1, that's $49. If they have 2, that's $38. Now the question is, can you describe the relationship between the number of allowances claimed on Form W-4 and the amount of tax withheld? Here you go. As the number of allowances increases, the amount of federal income tax withheld does what? You are correct. It decreases. IRS states that it's possible to have $40 a week too much deducted from your paycheck. So you know what they suggested? They suggested that you correct this form properly. You bring that money home, and then you redirect that money to life enhancement, you redirect it to paying down debt, or making certain investments. That will be your choice once it is done. Now, let's take a look at the advantages of page 2, which will be your itemized and business deduction estimates. Page 2 of the W-4 is most often not introduced to the employer by human resource or the employee, possibly because there is an assumption that the employee does not file itemized tax deductions nor have a business-related deduction. At this point, you should understand that human resource managers are not trained to help you complete this form properly. These people are generally data entry people, okay? Then you should also note that because someone works in HR, prepares taxes, or is a CPA, it does not mean they are financially literate. What do we mean about that? They're not strategists. They're not teaching you to strategize on this form. So they may give you some fears about this form. They may see that there is nothing that's going to be deducted from your paycheck, and they may, in all honesty, be afraid for you and try to help you because they see that. But if you are understanding the process and the strategies of MyEcon, you will thank them, and then you will tell them to submit this information as you have submitted it. So learn not to be so impressed with people with titles and be skeptic and over their marketing pitches, okay? Because people with titles, and they look good, just like these people here in those suits and all, they look good. We figure they know everything. And so because they are the people that look good, they should understand the direction we're going in. That may not be so. Okay, so now let's take a look at page 2, your deductions and adjustment worksheet. Now, if you don't know anything about Schedule A, and this is not you, then the recommendation is skip 1, 2, and 3 and go to line 4. If you do know about Schedule A and you've been using that Schedule A, then here's a suggestion. If you itemize, get the average between 3 tax years and use that number. Always be aware that things change, which means that on your Schedule A, if you are buying a home, you may end up paying the home off and you won't have the credit for the interest on your home, the insurance, and things that belong on the itemized worksheet. We won't go through that. If you are an itemized tax filer, then you will understand what this is. And if you do get a number, then go ahead and complete the information 1 and 2 and 3. Now, if you do not, skip 1 through 3 and let's go to line 4. Line 4 says, in an estimate of your 2016 adjustments to income and additional standard deduction. So this is the average of your business deductions. So what we do is we recommend a soft number right here, 4,050, which is equal to the exemptions per person or per dependent that is used on your tax return, okay? We believe that you should at least be able to take write-offs for at least $4,000, over $4,000 or $5,000. But we don't want you to just put a number up there because you can gain a lot more allowances on the front of your worksheet. So that would be incorrect if you've not learned how to estimate those tax deductions through the year. So my suggestion is do 4,050, and when you learn more, you will be able to go back on this form and you will be able to have more deductions here. Now, we're going to follow the instructions. It simply tells us to take, on line 5, it says add lines 3 and 4 and enter the total. So we know that if we add lines 3 and 4, that total will be 4,050, right? So we will put 4,050 on line 5. On line 6, it says enter an estimate of your 2016 non-wage income. So that would be applying to people who are already receiving dividends from some type of retirement or investment or pension plan or something of the like. So you would know your estimate for the year, and you would enter that number there. If not, you will place 0. Then on line 7, you will subtract 6 from line 5. And if it is 0 or less, enter 0. So just say, for instance, we had 4,005 listed here. Then we had 0 listed here. Then that answer on line 7 will actually be 4,005 and any other number. Okay? Then the instruction tells us on line 6 to divide the amount on line 7 by 4,050 and enter the result there. So just in case that number is 1.555, 1.36789, you would drop the number that comes after the 1 and you would actually put that number here. Then the instructions, enter the number from personal allowance worksheet. That means that if you got a number on the front page, page 1, you would add it to whatever you got here, and that's the number that you would end up putting on the front on line 5. Okay? Now, if you plan to use the 2-earner multiple job worksheet, also enter this total on line 1 below, or otherwise stop here and enter everything on line 5 on page 1. Okay? Now, let's take a look at frequently asked questions about this W-4. Let's hope that this is going to clear up a lot of things that are in your head so far as we go through this training. If you are married, does your spouse complete a W-4 form? Let's see what we say. Yes. It helps tremendously for you to know your estimated tax liability. That's another training that I am going to do that you will be able to take a look at and know how to estimate your tax liability off of your income. But of course you want to complete the W-4 for your spouse. Will it mirror your W-4? Probably not, because you are the one that's in business, and one of you probably is going to be different on line 1. But you still complete that W-4 form for your spouse. Does your spouse complete page 2? No. If they are not in the business, they do not have to complete page 2. However, if Schedule A is something that you both share, then they will go and complete the information then using Schedule A and calculating all the way down. Do married couples need to complete the 2-earner wage section? Let's see what the answer is here. That will vary. Read your instructions and follow them. However, keep in mind that as a business owner, you have the opportunity to create legal deductions to offset your tax liability. With proper tax planning, anything is possible. So if you stick with us long enough, we will actually be able to share with you information, and then it will start to click with you the strategies that you will need annually to offset your tax liability. Okay? And then there's one more caution. Line G, child tax credit. If your child turns 17, remember, within that tax year, then you will need to go and adjust your W-4 form accordingly. Now, let's take a look at the difference it can make in your cash flow. Just say, for instance, you change your W-4 form, and in changing your W-4 form, you may get anywhere from $50 to $800 or more, depending on what your total income is, okay? But let's use for a middle number, 600. You adjusted your W-4 form and you brought in a monthly increase of $600. This is an investment example. That is $7,200 on an annual basis. That's new cash flow to your household. Let's say you directed that $600 immediately into some type of investment fund at an 8% rate of return. In 15 years, investing $7,200 is going to be $208,000. In 30 years, that's over $800,000. So you remember at the beginning, I was sharing that when you change your W-4 form, we want you to give direction to your money. That's what it's about. You may have a life enhancement that you need to like, say for instance, you didn't have enough money to pay insurance on your car, or pay your medical insurance, or to buy life insurance, or you didn't have enough money to pay your light bill or your groceries. That's life enhancement. You may need to buy a car. That's life enhancement. But in the event that all of these things are running okay, then guess what? You can turn right around and invest this money and begin to make money with your money. Look at another example. So then what if you still have a certain amount of debt? take that $600 that you recovered from your W-4 form and then add it to the debt elimination software that comes with our cash flow strategist, which is your next step from here. Now let's take a look at this example. Say for instance your car is $17,000 balance and you've been paying $545. You're going to take that $600 added to that $545. That's going to be a new payment of $1,145. Now you're going to eliminate that debt in 15 months instead of 32 months, which is going to recover $1,145. Now look at what you're going to do with that $1,145. You're going to add it to a current payment to your $8,000 Visa card. Now you're going to pay $1,345 a month, and you're going to pay off that Visa card in 6 months instead of 78 months. Then the available cash flow that you're increased is $1,345. Now you're going to take it and dump it into your home mortgage of $200,000. Change that mortgage from $1,200 to $2,545. Pay that house off in 79 months instead of 360 months. Now you have created a new cash flow of over $2,500 a month. Okay? How many of you agree that that's a significant amount of cash flow that you can do something else with? And so this is why we have to take you to the next step, which is going to be your cash flow strategist, so that you can make a plan with that money. Income tax returns will decrease. You need to understand that. A lot of people are looking for big tax returns. Big tax returns mean that you overpay the government. Our goal here is that you don't overpay and you don't underpay, is that you may break even. And then if you still have children and you qualify for earned income credit or any other credits that are there, then you will get your credit. But you will not have a large tax return because you get that money on a monthly basis in which you control what is done with it. Okay? Now, let's look further at this example. This is a single person without deductions that has an income of $80,000. Their standard deduction is $6,200. What happens here is they have only one exemption, and this is for, this is for the year 2014, okay? That exemption was $39.50. So their taxable income is $69,850. Now their estimated tax liability is 25%, and that's $8,238. All right? Now when they get through doing the calculations, they're actually going to pay the government $13,395.25 out of this $80,000. Now let's take a look at this single person adding at least $20,000 in business deductions. They lower their taxable income significantly, okay? It's lowered to $39,850. Now they're going to be in a 15% tax bracket. That's going to be $443 added to $5,081.25, which is going to lower their tax liability significantly. That's $7,795 in tax savings. Would you agree that this is going to make a significant difference in your household if you operate your business with the intent to make a profit and you take your tax write-offs that we're going to actually show you how to do? Let's take a look at the married couple. A married couple making $80,000 total income. Standard deduction $12,400. Then their exemptions is $15,800 because they have two dependents, okay? Now their estimated tax liability is $68.63. They add $20,000 in business deductions, lower their taxable income, and now they're only going to be responsible for paying the government $38.63, which is a $3,000 savings. Okay? You may not understand this now, but trust me, as we train you, you're going to get the point that this is the best way to go. This is called income shifting at its best. So we're going to share more information and more details with you after this, but we want you to get this done first, and then we want you to report to your team, to your upline sponsor, What is the difference in your check when you change your W-4 form? Some of you may see a difference. Some of you may not see a difference. Some of you may see a huge difference. Some of you may see a lower difference. And that would be because your income is different, okay? Everybody's income, if you have a lower income, you may not get $500 or $800 back. But whatever you get on your income scale will be powerful for you because that's income that you can do something else with. So what we believe is it's a win-win situation. So make sure you get this W-4 form completed right away, and then make sure that you measure the adjustments. Look on your pay stub, look under your federal taxes, and compare what you used to get taken out or deducted to what you get deducted now that you have learned better about your W-4 form. This is Clarissa Pace. I'm EVP Gold. I'm glad you have spent this time with me. Be blessed.